All morning long, we've been talking about NVIDIA crossing that $4 trillion mark, just a tick below last time we checked, but still very close to $4 trillion. That march happened pretty fast from 3 to 4. What does that signal about AI and the AI trade here in the U.S.?
We're seeing a number of signals, Frank. First of all, TSMC just released earnings about 20 minutes ago, and they had about a 39% increase in their revenue, and so they beat all their numbers. Another indicator of the strength of this AI market. You're seeing demand from the big players and also from sovereigns and others for these kinds of chips. My prediction is that NVIDIA and Microsoft will cross the $5 trillion mark, Frank, in the next 12, 18 months. I see no impediment to that happening. If we're in the current geopolitical general framework, I think we can easily see $5 trillion for those two companies. With TSMC's rise now, they now just joined the $1 trillion club. They're just at that hovering point of $1 trillion market cap. And that means there's now 10 different companies in the world today worth $1 trillion or more. So it's really exciting, Frank, to see all this movement.
Jack, I don't know if we ever asked you this. Are you an NVIDIA customer? Do you buy their chips? And I was actually talking to Dan Ives from Wedbush yesterday. He says there's basically 10 to 1 demand. There's 10 customers that want a chip for every chip that's actually available.
We're very fortunate, Frank, in that we're a special NVIDIA partner. Just spent time with Jensen yesterday, and we use the DGX Cloud. DGX Cloud is the way to use NVIDIA chips that are the latest chips. As you know, right now, there's Hoppers out there, but there's also Blackwells, and now upcoming will be the Vera Rubin chip. And so the way to access the latest and greatest from NVIDIA is the DGX Cloud, and we're fortunate to be a partner. And in fact, Frank, we just announced with NVIDIA 10 days ago, the initial results of that partnership is the largest data set for the biopharma world, 5 million plus molecules that we characterize using our Sandbox AQ software on NVIDIA DGX hardware. That's a breakthrough, Frank, for the biopharma world, developing drugs for cancer, Alzheimer's, other major diseases.
Jack, you're bearing the lead on us. You were with Jensen Huang yesterday. What were you guys doing? Were you popping champagne, wearing leather jackets? Don't even answer.
Following a slow start to 2025, NVIDIA's stock has surged back, indicating a positive outlook in the market. Only a few months ago, NVIDIA's story was much more circumspect. As worries about possible demand headwinds for its high-performance GPUs increased earlier in the year, the stock saw increasing pressure. Notably, worries that NVIDIA's expensive GPUs would become less appealing were sparked by the January release of DeepSeek's affordable R1 large language model, LLM. New U.S. government limitations on GPU shipments to China exacerbated the situation by destroying billions of dollars in potential income. In general, NVIDIA's early 2025 story was one of caution and challenges. However, things have changed. NVIDIA became the first publicly traded firm to momentarily achieve a whopping $4 trillion market valuation as its shares jumped 51% in just 3 months. The selling pressure on tech, notably NVIDIA, has decreased as macroeconomic concerns have subsided. Furthermore, the company is well positioned to benefit from the rapidly growing demand for AI infrastructure because to its dominance in the hardware, software, and networking components of the AI ecosystem. The strength of NVIDIA's fundamentals is demonstrated by its recent financial performance. The corporation generated $44 billion in revenue in its most recent quarter, a 69% rise over the previous year. Due to the increasing demand, the data center segment led the way with $39 billion in sales, a 73% increase. Furthermore, the fast expansion of AI factories worldwide and the move from AI training to inference bode well for growth. The primary driver of the company's growth is currently the new Blackwell platform. Nearly 70% of data center computing revenue came from Blackwell chips in Q1, which was the fastest rise in NVIDIA's history. NVIDIA is providing AI computing at a scale and efficiency never before possible with its groundbreaking GB200 NVL systems, which also have the lowest cost per inference token in the market. NVIDIA's tenacity is evident in other domains as well. With $5 billion in quarterly revenue, a 64% rise from the previous quarter, networking has become a potent second growth engine. The high bandwidth, low latency performance needed for next-generation agentic AI, which seeks to outperform generative models by enabling autonomous reasoning and decision-making, is made possible by technologies like NVLink and Spectrum-X, which are now crucial for AI infrastructure. Outside of the data center market, NVIDIA is still growing in the robotics, automotive, and gaming industries. Revenue from gaming reached a record $3.8 billion, a 48% sequential increase. Due to the high demand for self-driving cars and cutting-edge cockpit platforms, automotive revenue increased 72% year over year. It is anticipated that NVIDIA's technology will power AI-powered PCs and next-generation games, significantly increasing its total addressable market. There are no indications that NVIDIA's momentum will slow down. The internet giant just released a positive second-quarter revenue estimate, predicting $45 billion, a strong 50% rise over the same period last year. This guidance demonstrates the data center segment's ongoing strength, which, despite geopolitical uncertainty, continues to be a major growth driver. The Blackwell platform, the company's most recent innovation, accounts for a significant portion of such resilience and is anticipated to support NVIDIA in maintaining worldwide demand in spite of regional challenges. Wall Street believes that NVIDIA has a bright future. NVIDIA is still rated by analysts as a strong buy. Furthermore, the street high price target of $250 indicates that NVIDIA's stock could rise significantly over the course of the next 12 months. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. Although NVIDIA's pricing may initially raise questions, particularly given that its projected price-earnings ratio is about 40x, the premium seems to be warranted. Strong earnings growth of 36.5% in fiscal 2026 and another 32.3% in fiscal 2027 are anticipated from the corporation. When that degree of consistent profitability is taken into account, NVIDIA's pricing becomes much more affordable. The answer strongly favors hold or even buy for long-term investors. NVIDIA maintains its dominating position in the AI ecosystem and keeps delivering great growth. Even though there are always geopolitical dangers, NVIDIA remains an appealing investment because to its innovation and ongoing product demand. Goldman Sachs announced a new buy rating on NVIDIA Corporation on Thursday with a price target of 185. The action was taken just days after the chipmaker's market worth momentarily surpassed $4 trillion. NVIDIA's leadership in accelerated computing and its industry-standard CUDA software, which programmers use to create and implement AI systems, were emphasized by analyst James Schneider. He also mentioned how NVIDIA's growing clientele, which now includes cloud service providers, medical facilities, and robotics companies, is probably going to keep the market for next-generation GPUs strong. Schneider commended the company's rapid product launches and pointed out that, in contrast to many of its competitors who are still improving their products, NVIDIA is now making money off of its AI platforms. He predicts that NVIDIA will outperform over the next 12 months and feels that the valuation is still attractive despite the stock's recent surge. Investors will keep a close eye on NVIDIA as it negotiates fierce competition and changing AI trends to determine if this optimistic start can spur additional increases. Despite export limitations from the United States, NVIDIA is committed to finding a method to sell AI processors in China. According to the Financial Times, the semiconductor giant intends to introduce an AI chip tailored for the Chinese market as early as September. According to the Financial Times, this AI chip would be built on top of NVIDIA's Blackwell RTX Pro 6000 processor, which has already been altered to comply with current AI chip regulations. High bandwidth memory and NVLink, NVIDIA's fast but low latency communication interface, which are characteristics of the company's cutting-edge AI chips, would not be included in these chips. Jensen Huang, the CEO of NVIDIA, announced last month that the business will no longer factor in the Chinese market when predicting its revenue and profits. Perhaps that transformation won't last long. Regarding the report, NVIDIA chose not to comment. With the current export controls, we are effectively out of the China data center market, which is now served only by competitors like Huawei, an NVIDIA representative continued. With one of the biggest developer communities in the world, China produces non-military applications and open-source foundation models that are utilized all over the world. All of those apps should function optimally on the US AI stack, even though security is crucial. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Important stuff for investors. Yesterday, we had Chris Heisey from Bank of America Merrill Private Bank. Here's what he said about the AI trade. I want to get your response.
we're on the verge of one of the greatest capex booms we've ever had, at least in the last 5 or 6 decades. And everything infrastructure around that, robotics, automation, generative artificial intelligence, data center buildouts, all of that is starting to begin to accelerate.
All right, so I want to get your take. We're just talking about is what a lot of people call, and I believe Jensen Huang calls, physical AI. Let's get beyond NVIDIA right now. Who are the other winners of this capex cycle, if you agree with what he has to say?
Sure. Let's talk Mag 7. Let's talk the rest of the economy. Then let's talk power and the power needed for this AI revolution. So Mag 7 right now, Frank, represents 34% market cap wise of the S&P 500. Mag 7, 34% of the S&P 500. But Mag 7, Magnificent 7, only represent 11% of the GDP of the United States. And so what that means is that there's 89% of the GDP out there that are lagging behind, both in the market cap rise that the analyst was just talking about and in adoption of AI. What you see in the Magnificent 7 is that AI is core to their business. It's driving their core revenues. And so companies like Microsoft, Google, and others, NVIDIA, it's driving the core business. For the rest of the economy, if you're a pharma company, if you're others, large language models, helpful. You can reduce some costs in customer service. But the core business of making a new drug, the core business of being an energy company, the core business of making an automotive product, if you're GM or Ford, that is not really being impacted by large language models. Of course, quantitative AI, the next wave of AI, is the key to that. So what we're seeing is a divergence. My prediction, Frank, on this show here is that we're going to see the percentage of market cap that Mag 7 represents going from 34% to 40% before the rest of the economy catches up.
That's a pretty bold prediction, Jack. Before we let you go, we're almost out of time. I want to talk about your business. What do you have going on in the second half of the year, whether it's in the AI space or the quantum space?
Well, there's a number of different areas that we're focused on. First of all, SAIR, this new data set that we released with NVIDIA, is the first of a number of data sets that we'll be coming out with using our quantitative AI, our LQMs, large quantitative models that allow us to produce high-quality data sets and models that hit the core of developing drugs, developing new materials, all kinds of applications, including, of course, AQNav as well, navigating a plane in the face of no GPS. So a wide variety of quantitative applications. And we're also looking in the cyber realm now. AI and cyber, Frank, look for that to be a key trend for the second half of the year as more attacks happen and enterprises need to defend themselves. The hackers are using AI. We also need to